go into the outer column. And remember, we're not going to do anything with more than one column here. So in this case, it's not like I'm going to jump over here and be adding this up. What we're going to do is just do one column at a time usually, and that's going to be just this column. We're going to add up this column, and that will give us our total property, plant, and equipment. So we're going to go down here. I'm in L15 equals SUM. Double click that sum function and highlight the 49 down to the 1125. Let go and enter. So there we have the sum. So here's the sum. Here it is up there. If we highlight these, then we found a home for it. So I'm going to make that yellow, saying we found a home for that. And now if we want to check this numbers, it should be this plus this plus this plus this plus this minus this plus this minus this. Calculates for us in Excel 1435. And if we add that up here, the question is, are we good on that? And we could check it one by one too. If I this plus this plus this plus this adds up to 8010, 8010. This minus this plus this minus this adds up to 6025, 6025. So now let's add up total assets, which will be this column. Again, we're not going to bounce around from columns. Once you're over here, we don't want to be going back into these columns. We're just going to add up the outer column. I'm going to do this with the sum function, even though there's blank cells, and that disturbs people sometimes. But you can use the sum function with blank cells. I'm going to sum up and then highlight from here down to here and enter. So we just added up the 810 and the 6025, 1435. Again, we could check that. This plus this plus this plus this minus this plus this minus this equals 1435. That looks good. Now we're going to go to the liabilities, of course. Those are going to be the orange accounts. And we're going to start off with current liabilities. So current liabilities being our subcategory. Once again, we're going to type it in there. We're going to put a colon representing the fact that there's going to be multiple current liabilities within this category of types of liabilities. I'm going to copy all of these and call them current liabilities. And note we have a note payable in here, which could be current, could be long-term. What is a current liability? It's something that's going to be due within a year's time period. So if the note's due within a year, and I'm going to assume it is in this case, then we're going to put it in the current liabilities. If not, we'll put it in long-term. Also note that many notes will have a current portion and a long-term portion, meaning we're going to make some payments before the end of the year, within a year's period of time, and some payments outside of that year's period of time. Why is it important for us to break out the current liabilities? Because we're going to have to pay them pretty soon, and we need to compare that to how much cash and receivables we have generally that will be used to pay the current liabilities. All right, so we're going to copy these. I'm going to call them all there. Put our cursor in M5, right click, and paste them 1, 2, 3. So there we have it. I'm going to increase the indentation. So we're going to go up to the Home tab. We're going to go to the Alignment group. We're going to go to the Increase Indent and 1 time. And then we're going to put the numbers here. Now, once again, we have these two columns. Means has nothing to do with debits and credits. And we need to get rid of the fact that we have a negative number here again. I want to make it a positive number over here. So I'm going to do that by, instead of hitting the equal sign, we're going to hit the negative sign. So it's still a function formula in Excel, and just point to that 1890 and enter, and it'll just flip the sign for us like so. Could do the same thing here for the notes payable, negative of that number, and enter. Same thing for interest payable, negative of that number, and enter. Same thing for unearned revenue, negative of that number, and enter. And again, you might be going, well, you know, you could have done that faster. And we could have used the auto sum, so I'm going to delete autofill. So I'm going to delete that. It will still autofill, even though it's got the negative in there. We just put our cursor on the fill handle and drag that down. Auto drives it, fill calculates it, and there we have that. All right, so then we're going to bring this out to the outer column now, and that's going to be called, we're going to call it actually just total liabilities. Why? Because they're all current. So that's kind of a weird caveat there, but we're not going to subtotal current liabilities and then have another line saying those are all the liabilities we have. We're just going to have one line saying those are all the liabilities and they're current, indicated by the fact that we have current liabilities here. So here's total liabilities. I'm going to hit enter. I'm going to go back on it. And again, if you're in the cell, you're not going to have the options up here. So you got to get off the cell and then go back on the cell. And you could hit Control Enter to do that's probably the fastest way. So you got to go to the Home tab, Alignment, and we're going to increase the indent 2 times. Then we're going to go out into the outer column and sum those up for the total liabilities. We're going to hit the equal sign, SUM, and double click on that sum function, highlight the numbers we want here to here, and all it is a point and click process, but you do want to get used to that sum notation, sum N5 : N8, and enter. Alright, so there we have that. Now we found a home for all these. I'm going to put a little yellow mark there saying we found a home for those. And if I highlight these, we have 10,650, 10,650. It looks correct. These are negative, but that's because they're credits over here, and this is a positive number. We're transforming this into positive numbers, not debits and credits. Alright, so then we have the equity, and this is the most confusing piece of the balance sheet that we have to look at, because if you look at it over here, it's like, well, we've only got half of the accounts covered, and we only have one more section in the equity section, and the only account that we're going to have in the equity section is called capital. So how is it that we have all these, we've only found a home for half the numbers, and we only have one account left, and yet we're going to have to somehow account for all of this stuff? How does that work? Well, I'm going to do it the wrong way first, and then explain that, and then we'll get into more detail on that. So first off, if I just put this capital number that's on the trial balance here, 3,000, I'm going to flip the sign with a negative of the 3,000 and enter, and then I'm going to add up the total liabilities and equity. And of course, it should be total liabilities and equity. These two outer numbers should be the same as total assets. Let's see if that's the case. I'm going to do this with the sum function again. So there are blank cells. That's okay. It's okay. We're going to highlight from here to here and enter. So that 10,650 plus the 3,000 is 13,650. Doesn't add up to the 1435. Why? Well, we haven't found a home for everything. And we got all this stuff that we haven't found a home for. And that means that when we look at this equity account here, that means the capital as of July 31st. We don't have to put July 31st here because it's already here in the balance sheets as of a point in time, that point in time being July 31st. This capital account is actually as of July 1st. It's going to be the July 1st capital plus any investments that have been put into the capital account. How do we know that? That's just the way the trial balance is, because all this stuff will be in the capital account as of the end of the period. So that's the most confusing thing to think about. So we're going to just stuff all these numbers into this one number for now to show you how do we find a home, where does all this information go on the balance sheet in order for our accounting equation to work. We just say this number, the credit minus the debit plus the credit minus the debit minus debit minus debit minus the debit minus the debit is 3,385 credit balance. That's what we're going to put here. I'm going to put the whole thing here. So I'm going to put a negative SUM of this minus this plus this minus this minus this minus this minus this, and enter. So there's the number, and now we're in balance. So let me do that one more time. Note that if we put an equal sign here, SUM, then we would have a credit, negative number minus a positive number, negative number minus a positive, and that would give us a negative. But remember, this over here is represented in credits, and we want to flip the sign of that. How can we do that? We can put a multiply times -1, or just put a negative in front of the function and enter. So there we have it. And of course, if we want to do that the quickest way, we just put negative SUM here and just highlight these down, and there we have it. So now our assets equal our liabilities plus our equity. However, a lot of information is in this one number. We want to see more detail on that number. We want to see the timing. We want to see how we did in the prior year. So this can be thought of as the book value of the company, meaning if the owner sold all the assets, they can hope to get cash then, theoretically, at $14.35, pay off the liabilities of $10,650, walk away with $3,385, theoretically. But now we want to know, how did we get to that point in time? How did we get to a net value of this? Then we have to tell the story of what happened. That's going to be the income statement and the statement of owner's equity. That's how we did last month in this case. So when we put in the income statement, we're going to head it up for the month ended July 31st, 2000X1. And notice that's different, of course, than just the period at the end. What does that mean? It means that there's a beginning, July 1st, and then there's an end, July 31st, and this is how we did during that time period. So the income statement, if you think about income, if you ask someone how much they make, they have to assume a time frame. You have to assume, what do you mean, a month, a paycheck? Do you mean a year? We need that time frame in order to answer the questions related to the income statement accounts. So I'm not going to highlight that we found a home for these yet. We're going to find another home, and then once we do the income statement and the statement of owner's equity, this number right here will be the same as this number here. So that should tie out. And I'm indicating the numbers that should tie out in yellow in this case, if you haven't noticed that. So the yellow account will see that somewhere else because it's yellow. All right, so we're going to go down here and we're going to start off with revenue. Our revenue is over here, so I'm going to copy revenue. That's the first account, of course, on the income statement. Note that there's only one revenue, and now I pasted it 1, 2, 3, of course. Note that there's only one revenue account in our chart of accounts. Some companies may have more than one revenue account, but if there's only one revenue account, we're not going to have a subcategory. I'm not going to say revenue colon subcategory and then here's our one revenue account. That doesn't, we don't need to do that because there's only one revenue account. Therefore, we're just going to put revenue on the balance sheet on the income statement, and we're going to put it in this outer column. Now remember, the outer column does not mean debits and credits. There are no debits and credits on the financial statements. This just means that this is where we would sum up revenue, but we don't need to have a sum up column. We don't need to bring anything on the inside because there's only one revenue account in this case, so we're just going to bring it out into the outer column right off the bat. Note that revenue has a credit in it, and we want to flip the sign, of course. Therefore, I'm going to put a negative here instead of an equals, point to the revenue of 2785 and enter, and there we have it. Now note what our goal is to get to net income, and we already know what net income is. It's an 885, not a credit, but not a negative number. It's not a loss. That means a credit. So we should have a positive 885 when we are done. All right, so then on the expense side now, we have a lot of expenses. Expenses are oftentimes the accounts that have the most types of accounts in there. So they all do the same thing, so they're kind of easy to think about because they all are debit balances and they only go up, but we could have a lot of them. Also note that if we have a lot of expenses, then it's very likely that on an income statement we would group the expenses in a different way and combine some of the expenses in some different way. But in this case, we're just going to list the expenses out because we don't have a whole lot of them. So I'm just going to copy all the expenses. I'm going to highlight them down here, going to right click on those, copy, and put those in I-22, right click and paste 1, 2, 3. All right, so there are the items. We're going to increase the indentation then. So I'm going to go to the Home tab, we're going to go to the Alignment group, and we're going to increase the indentation like so. And so we could try, notice that these are running into this column over here. We could try to abbreviate some of them. Maybe the depreciation we could abbreviate like so. And that's basically all I'm going to do. And the rest of it, if it runs over, I'm not going to worry about it for now. And we're just going to put the numbers in here anyways. So we're going to go up to J22 and just select equals, and that'll just write over that run over of the numbers and point to the 275 and enter. Then the auto expense equals, and we're going to point to the 120 for auto expense, enter. And then the advertising expense equals, and the 315 and enter. Then we're on the rental equipment equals, the 75 and enter. The insurance equals, we're going to point to the 0 and enter, and that's an adjusting entry that we probably should go back and take a look at, but we're going to move forward at this time. And then the depreciation equals the 100 and enter, and the depreciation expense for the lawn equipment equals the 375 and enter, and the interest expense equals the 640 and enter. So there we have that information. Now note, you could be saying, well, we could have done that faster. Yes, we could have. We could delete this. We could say that we could use the autofill, of course. We're going to put our cursor on the fill handle and auto it down, drives it down, and fill calculates it there. And then we're going to have the total expenses. So I'm going to copy this time and see if we can do this faster. I'm going to paste it, and I'm going to put a total in front of it. And then I'm going to get the E and make that small. I'm going to get rid of the colon. We don't want a colon. And then I'm going to select Control Enter. That'll put us on the cell rather than in the cell. Then we'll go to the Home tab, Alignment, and increase the indent 2 times. All right, there we have that. And now we're going to pull this out to the outer column. And again, remember, these don't represent debits and credits. That just means that we're subcategorizing the expenses indicated by the colon here, the indentation, and the fact that they are in the inner column. Then we'll go to the outer column in K30 and do our sum function, which is equals SUM. Double click the sum function, and then highlight the 275 down to the 640. And that equals the 19. And if we look over here, we can highlight these and say, does that make sense? Yeah, that adds up to 19, so that looks good. Now we're going to have our final account, which is going to be net income. That's our bottom line number for the income statement, and that's going to be down here. So we're going to say net income is here. We're going to calculate that with an equals. We can't use the sum because it's a subtraction problem. It's going to be the revenue minus the expenses. That's how we calculate the net income. And what's it going to be? It's going to be hopefully that 885 right there. There it is. All right. So we can double check it. We can highlight over here and say, okay, that adds up to 885. It's a credit here. It's plus and minus over here. That's what we're trying to change from the debits credits to the plus and minus. And so we found a home for these. So I'm going to highlight all these. I'm going to put a little yellow mark there. And the only ones we haven't found a home for then are the capital and the drawings there. And that's what we're going to use the statement of equity for. You'll also note that we have a yellow number here. That means we're going to see that yellow number somewhere else. We're going to see it in the statement of equity. So statement of equity, also a timing statement, also has a beginning and an end. So I'm going to copy and paste this one. So it's not as of a point in time like the balance sheet. It has a beginning and an end, meaning it starts in July 1st and ends July 31st. And it's all about the equity account, the capital account. So the capital account in this case is going to be the capital account. So it's this capital account. But remember, the capital account is deceiving here because the capital account, really, this basically means the beginning capital account, even though there's no date on the trial balance. And here we're going to put the fact that we're talking about the capital account as of July 1st, 2000X1. So now we're going to say, hey, that's the beginning capital account, and we're going to take this number. That's a credit. We want to make it a positive number, so therefore I'm going to select a negative instead of equals, then scroll up and point to the 3000, and then select enter. So there's the 3000 there. Then we have the thing that's going to increase the capital account. The main thing will be net income. Net income is what increased the capital account. Remember, the capital account represents what's kind of owed to the owner, and so now we're going to increase it by the amount that was earned during the time period, and net income has already been calculated here. So that's where we're going to see that's where that yellow number comes into play. So we're over here on J37 equals, and we're going to point to that 885 and enter. So now we've basically included all of this blue stuff in the statement of owner's equity. All right, and then we're going to have one other thing. The only thing we haven't found a home for, I'm going to highlight we found a home for that, is draws now. So that's what we're going to have next. We're going to have draws. So I'm going to call drawing. So I'm going to put that down here in I-38, right click, paste it, 1, 2, 3. And then I'm going to add the phrase less. Why? Because it's a subtraction problem. And if you think about it, it's because the capital account has a credit balance, represents the amount owed to the owner. This is what the owner took out. It has a debit balance. And if the owner took it out, the company no longer owes it to the owner. It needs to decrease the capital account. So you can see that, of course, if we highlight the 2, it's going to be a subtraction to 2005. So it needs to be a subtraction problem when we convert it to a plus and minus. Again, I don't want to represent the subtraction problem with a negative number, a minus sign. We want to represent it with the word less. So I'm going to put an equals here and point to that last number, that 500 there. And now we found a home for everything. So everything should work as long as we have our signs going the right way. And we're going to put the subcategory now on the outside. So we're going to call this increase in equity. So we call it increase in equity. And you might say, well, why is it increase in equity? Because equity went up and down. And it's basically a net increase because it went up by 885 and it's going to go down by 500. So it's really the net increase, but we just usually call it just an increase, even though it's the net increase. Okay, so we got our cursor in K39 equals, and we're going to point to that 885 minus the 500. Remember, it's a subtraction problem indicated by the less there, and enter. Okay, so now we have our ending capital. So now I'm just going to copy this capital again and paste it down here, but paste it 1, 2, 3. But now it's our ending capital. So not as of July 1st, it's as of July 31st. So as of July 31st, we're going to add up the outer columns now. This is what we started. This was our net increase. So this equals, and we could sum it up, SUM, and the 3,000 to the 385, and that gives us our 3,385. So that is why when we look up here and we say, why is all this stuff blue? Well, this entire thing is the equity account. If we highlight the whole thing, 3385, 3385, where else are we going to see this 3385? We're going to see it on the balance sheet. We already figured it out. That's why this whole blue thing is right there. The whole story then is given through the income statement and the statement of equity. So recap, we can see that the numbers that should tie out on the balance sheet, on the financial statements, should be assets, should of course equal liabilities and equity, and we know that the capital account should tie out to the equity capital account. In order to do so, we break out the income, net income on the income statement, which will then be part of the statement of owner's equity, which will be calculating the total equity as of the end of the time period. We're given the activity in the equity account and crunching all of this stuff in to one number called net income right there. And that gives us our ending capital, which will be on the balance sheet. Also note that if you wanted to go through here and do some formatting on this as well, you might want to put underlines. We could put like underlines on all the calculations. So if you go here, there's different types of ways to underline it. But if you go here and you go to the Home tab font and put that there, it'll keep it green. So we'll have a green underline. So we could put an underline, say here to represent a calculation, here to represent a calculation, an underline. Whoop. I'm going to undo. We want an underline here and an underline here, and we could have an underline here. And then if we go on this side, we have an underline here, and it'll make it orange at this time because, whoop, I did the wrong thing again. Undo. We're going to use this underline. And that'll make it orange, and then we can have the underline there if we so choose. And that'll make a yellow underline and so on, and we can go down here and underline this one. And obviously if you underline the entire cell, you can use this one, but it doesn't work too well when we have highlighted the cells and put grid lines into the cells. And then we could underline this one if we so choose. And if you scroll down here, you could underline this one, and that looks good like that. All right, anyway. So that is that, and we have now completed the financial statements.